All right. Hello,
Okay.
everyone, and welcome to the webinar. Okay, this is the second as part of seven. So today we have Pierre going to talk about his first steps in trading, and he will be explaining different order types. Pierre is an analyst with over 15 years experience, and he will be talking us through the different order types today. So I'll give you the agenda. So next slide is just a welcome and introduction. That's where we are here now. Then there'll be a short presentation on GMG markets and our objectives. You're going to learn the key order types and usage, and you'll be able to trade confidently by the end of it with some strategies as well. So let me just give you a risk disclaimer and warnings, just to explain to you a little bit about the products that you're going to be trading. So the presentation is for information purposes only. The presentation is strictly information purposes only and does not constitute any form of financial investment advice. The products that you're going to be looking at today are going to be contracts for difference, CFDs. They are complex and involve high risk due to leverage potentially causing rapid loss of your investment capital. Investors should fully understand how CFDs operate and carefully consider if they can bear the high risks of potential financial losses. CFDs are provided by Global Markets Group, GMG Markets Limited. Without advice, no verbal or written communication should be interpreted as investment advice. And with that, now I'll hand you over to Pierre, and Pierre can talk you through the rest of the seminar.
So hi everyone, it's great to see you all there. I'm Pierre Verret, and I am a market analyst at Global Markets Group. And I would like to first of all welcome every one of you to this second session already of this 7-part live webinar series. I really would like you to think of this series as your trading road trip, basically from your very first click on the platform to building a complete confident trading plan. This is where we gonna heads up to. Today we're gonna start with the engine that moves your trades. I'm talking about order types, right? So once you understand them, execution stop being scary and start fitting control. This is what we're gonna be doing today. A little bit of logistics before we roll. We're gonna run about more or less 30 minutes today with a short Q&A at the end. So feel free to drop any questions you may have in the chat as we go. Okay, so I'm gonna go. I'm gonna move forwards and go straight to today's topic. So today's objective is very simple, actually. By the end of the session, you will be able to name the key order types. So market, we're gonna talk about market orders. Limit orders, stop orders, and stop limit orders. And you're going to be able also to know when and why to use each and avoid the classic beginner error. So your execution supports your strategy instead of sabotaging it, basically. So now, first of all, when it comes to order types, I really would like you to understand that buying and selling is the headline, but the order type is the fine print that decides price control, speed, and risk. In a calm market, for example, you can afford precision, right? But in a fast market, however, speed might save you from missing the move, but it may cost you on price. There's no one size fits all. There's only the right tool for the right situation. This is what we're going to see today together. So feel free right now to type in the chat if you value more speed or price control. Anyway, we're going to cover all those areas together.
I've just put a poll up here as well now to see what different order types people have placed before. Okay, and it looks like basically market order is the most popular. Okay, and there's limit order is the second most popular. So yeah, go for it.
Yeah, absolutely. I mean, market orders is this is the order type that is the most used among the trading industry. It's the easiest way to enter the market. So anyway, we're gonna start with market orders because it's the simplest way to trade, basically. So let me move forward. Here we go. Okay, understanding market orders in trading. So I really would like you to understand that I want you to see market orders as your now button, right? So you press buy or sell and you're in the market at the best available price, right? It's pretty simple. That's perfect when catching a breakout, for example, or when you need to exit a trade quickly. But there's a trade-off to all this. In fast conditions, such as market open on indices or news, for example, we're gonna have the NFP at the end of the week. In volatile condition, in fast conditions, your fill may slip. Okay, this is important to bear in mind. Tiny example: you trade Euro USD. Euro USD quote at trades around the 110, for example. But if the market is sprinting, if the market is spiking up, in a very fast fashion, your buy may feel a touch above. This is not a platform bug. This is just the market moving, right? It's normal during news and volatile environments, right? So actually, let me switch to the platform right now. Give me a second. I'm taking up my platform. So, all right, there we are. Okay. So I'm
Yep,
gonna
can
show
see.
you how to place a trading. Yeah, Ross, everyone can see it. That's
Yes,
good.
yes, yes.
So we're on the Euro GBP pair. At the moment, it's a daily chart, so it doesn't move very quickly. But to open a new trade, it's pretty simple. You can do either from here or from the Market Watch window. But we're going to use the new order button right here. So when you click on that, it opens you the order mask and you don't touch anything basically. You have the symbol right here and you go for market execution. This is market order, right? You just have to set up your volume, the position sizing, stop loss take profit, and you just have to click on sell if you predict the market to move down, or buy if you predict the market to go up. Let's do it like this, and I have been executed right away. I have my position line right here, very fast, very reliable. So this is how we do it. Okay. Right. So I think everyone understands that. And you also said it, Ross, that the results to the poll show that most people use market orders. So I'm not going to spend a lot of time with this. And let's move forward with limit orders now. All right. Limit orders. So this is where things become a little bit more interesting. Limit orders are your patience tool, if I may say so. A buy limit always sits below price. Okay, understand what I'm saying? A buy limit sits. I'm going to show example on the platform right away, but for now I'm just describing it to you. A buy limit sits below price. A sell limit sits above price, which is great for taking profit at predefined level. For example, they're going to give you those orders, this kind of order type, limit orders, give you price control and reduce slippage. But if the market never tags your level, you simply don't get filled. Okay, so you're taking the risk of never entering the market, basically. Advantages, I've just said it. So advantages is that you get some precise levels, you have more control over price level, discipline entries and exits, and less slippage. Trade-off, opportunity cost if price runs away. So now let me show it to you on MT5. How does it go? So now you have two options to do it. The most traditional one, new order. You get the order mask right here. You click on pending order on the drop-down menu here, and then you select either buy limit or sell limits. Okay. Remember, buy limits, the execution price sits below. Okay. It's basically a strategy to buy. It's a buy the dip strategy, right? So let me show you an example. Buy limits. So let's say I plan to okay, let me mark my chart a little bit. Let's take a little bit of time to do a little bit of a trading strategy here. So let's say I think the markets may go down first before register a new high, right? So I have some resistance level right here, and I can see that I have a support level right there. Okay.
Yep.
All right. So now my strategy is that the market is going to go down up to this level before bouncing back up and go to this one or even higher, right? So for this kind of strategy, I'm going to use a buy limits. So you can do it like this, as I just showed you, and then you just have to enter the execution price right here, which is going to be 0.8609. And you can also add stop losses, take profit right away, but you can even do it at a later, afterwards, at a later date, right? So now you can't see it because you still have my line right there, but if I move it, you can see the execution price here. So when the market is going to go back down here, a market order buy market order is going to get triggered, right? And I'm going to be in, basically. I'm going to be executed. So now if you want to add some stop loss take profit, you can either right click on there and add it straight from here, or you can double click on your position line right there and you go to modify order and you set up your, let's say, 0.85 and take profit 0.87. And then you click on modify, and here you have, and you can then move them as you wish on the charts like that. Okay. Please note that if you move your execution price, it's going to move the whole set. Look, it's going to move your take profit and your stop loss as well. All right. So this is one way to place your pending order and your buy limits with this occasion on your MT5 trading platform. There is another way, which is more, it gets more with your intuition. So we say that I want to be executed right there. Okay. So I can also right click on the chart like this and then go for buy limits straight away. Boom. Okay. So it provides you with more clarity and stuff, but you can do it straight from the chart. All right. So this is for the buy limits. Again, bear in mind that buy limit, it's basically made for buy the dip strategies, right? So it's perfect when the market is, let's say, moving up and you anticipate bearish movements before a bounce back. This is perfect for this. Sell limits is the other way around. Okay, sell limits, let's take my example right there. Let's say, it's the opposite scenario here. You expect the market to go back to this resistance level, okay, like a retest, a pullback, okay?
Yeah.
And then you expect the market to move back down. So it's the same strategy. It's just inverted, right? So let's do it this way. I can click right there and actually notice if I right click anywhere below the current price, the menu is going to automatically suggest me the buy limit option. But if I click anywhere above market price, it's going to offer me the opportunity to place a sell limits. Okay, so you can do it like that. Sell limits. Okay, I have a sell limit there. It means that when the market is going to go up to that level, then I have a sell position that's going to be triggered. Okay, and I can then put some take profit right there or any other support area you may find. Anyway, so please feel free to put any questions if that's not clear enough, but this is very interesting, especially for traders who like to plan in advance, who like to anticipate moves. As I said, it's going to give you more price control, reduce slippage and everything, but you have to be careful when selecting the price areas where you want to be triggered, when you want to be executed, because if you don't do that correctly, you may want to miss an opportunity. Okay, let's say, for example, let me give you a quick example. Let's say I would like to be executed here, right there, because it's the top of this wick. It's the highest of the trading chart, the highest point. But let's say the market goes up, but stops right there, and then starts going back down. You would have missed a move for a few pips, a few points, and this can be very frustrating. So you need to trust in your ability, and you need to be able to predict the execution price efficiently, right? So okay, we're now gonna go to the stop and stop limit orders, if that's okay with everyone. Let me go back to it.
Yep.
All right. So a quick playbook to understanding stop and stop limit orders. So key order types for strategic trading and precise market entries. This is the same as limit orders, buy stop, sell stop, and buy stop limits, sell stop limits. These are very technical, and this is what we're gonna go through right now. Okay, so buy stop, as you can see, buy above price to enter on a breakout. Okay, bear with me. I'm gonna show example to you. I'm going to explain to you how this works and why is that useful. Sell stop, sell below price to limit losses, or enter short on a breakdown, and then buy stop limit triggers a buy limit. Okay, we're gonna see that afterwards. We're gonna start with the buy stop and sell stop right now. I would like you to think of those stop orders, buy stop and sell stop, as trap wires. Okay, a buy stop sits above price. If that means that if we break that level, you would like to be trigger in. Okay, a sell stop can um, be an entry below price for momentum shorts or your protective stop to cap losses. Okay, so let me show it to you on the chart because one image, one drawing worth 1,000 words, as we say. So let me show it to you. A buy stop sits above price. But now you're going to ask me, most of you are going to ask me, if you believe the market is going to go up, why not buy now, right? And I'm going to provide you with the answer to this question. It's very simple. Look, at the moment, the market is in a range, as you can see. It trades between two bounds, a upper bound and a lower bound, right? So now the market can go high and then go back down and so on and so on and so on, okay? Now, where the stop orders become useful is for, when you anticipate a breakout, right? So let's say you want to tell yourself that the market is trading in a range, but if you have a breakout, a bullish breakout of this resistance area right here at 0.8745, more or less, you would like to get long. You don't want to get long right now because the market is trading without clear direction at the moment. As I said, it can range for a certain period of time, right? But if the market breaks out from this level, successfully clears this level, you can, in your strategy, you may want to anticipate that the market is going to keep moving up. Okay. And as we're going to say during the next upcoming session about technical analysis and chart pattern recognition, in this situation, you can expect the market is more likely to breakouts to register a bullish breakout than a bearish breakout because the direction before the range was bullish already. But anyway, I'm going to save that for the upcoming sessions. So anyway, if the market registers a breakout here, you would like to keep buying to be in the market to get long in the market at this moment and at this moment only. This is where a buy stop order is going to become useful. So now look, new order, pending order, always buy stop, and let's say you like to 87.80. Okay, 0.8780. Boom. Look, you have your buy stop level right there. This means that if the market goes there, this is an area that has never been, visited or traded, on this time frame at least. So if the market goes there, according to your strategy, I'm not telling you to do this, right? But I'm just providing you with an example right there. So you believe that, let's say you believe that if the market reaches that level that has never been traded before, you believe that the bullish momentum is going to continue. The market is going to go there and it's going to trigger a buy order, basically. Okay, so this is where it's useful. Same thing with the sell stop order, actually. So let's say now we have a different scenario. If we have a bearish breakout from this level right there, you want to put a sell stop to enjoy the breakouts. Up, pending order, sell stop, and let's say you would like to get executed around 85. Boom. And actually, you can even do both. When the market is ranging like this, of course, at some point there's going to be a breakout in either direction. You can put a sell stop right there and a buy stop right there. In case so, whenever the market decides which direction is going to take, then you're going to make sure you're going to get executed. Okay. Actually, let's do this. Yep. Sorry. Click and buy stop. 0.8780. There we go. So now When the market is going to break out from this range, either, a bearish breakout, or a bullish breakout, I'm going to be in the next move. Because this is what traders want, right? Traders want to be inside directional moves, right? So this is where stop orders become useful. Is that clear to everyone? Please feel free to stop me if I have not been clear enough. And then we're going to move forward to stop limit orders. Okay, let me go back to it. So now stop limit orders are a bit more technical, right? Stop limits has a second layer to stop orders. Okay, it's going to basically, once triggered, it becomes a limit order. So you have a trigger price and an execution price. Okay, once triggered, it becomes a limit order, more price control, but you risk no fill if the market's gaps. All right. So again, I'm going to show you. All right. So now, let's say in this scenario, how can we do this? Actually, let me go back to, I haven't explained that. So buy stop limit triggers a buy limit once the stop price is reached. Control execution after breakout. Sell stop limits triggers a sell limit once the stop price is reached, which is useful for exiting or entering short, precisely. Okay? So now let's say you would like to, okay, we're in the middle of the range right now. And you would like, let's say, if the market goes to the upper bound of the range, you would like to trigger a new sell position, a sell limit position. Okay, so you're going to do this again. Pending sell stop limits. And you're going to put your price level, 0.8735, let's say. No, actually. By stop limit 0.8735. No, actually, I put the price. I made a mistake right there. Bear with me. Sell stop limits. So first you define the first price. This is the triggering price. And then you have the stop limit price, which is going to be the execution price. Okay, so let's go. 0.8735. And you want your stop limit price to get executed at 0. No, okay. 7. Oh, I made a mistake. 0.87. Décidément. Okay. 0.7 up. Okay, 0.86, and the stop limit price is going to be, let's say, around, I don't know, maybe somewhere right there. Okay, so now I don't know if you can see it because I have the white background. Okay, you can? All right.
Yeah.
Let me move it right there to the top of the consolidation. So let's say now I have a sell stop limit. So that means when the market is going to go there, even me, I struggle to see it, but you can see it. When the market is going to go there, it's going to trigger a sell stop limit. Okay, so it means you're not going to be inside the position. Basically you're planning your sell limits way in advance, 2 steps in advance, right? So unfortunately we cannot, and actually we can even
I can see the stop loss, the dotted line. Okay, there.
This is the stop limit level.
Yeah.
Okay. Maybe let me switch to a dark background to see it more clearly. I don't know if you can see this line, Ross.
Yes,
you see sell stop limit.
Yeah. I can see that.
Yeah. Exactly. So you're aiming for the top of the consolidation right there. Once the market is going to reach that level, it's going to trigger a sell stop limits. which is right there, and you can move anytime. You can move it there. You can, you know, play around with it. And
Yeah, good.
the opposite with the buy stop limits. Exactly.
Yep.
But this is how it goes.
Mhm.
Right. Let me go back to white background. And I think we covered it already. Um, yeah, let me head back to the slides. Right. So now I'm just going to give you, so these are the advantages and drawbacks of limit orders. We covered this throughout today's session. I mean, it's very interesting, and you can understand now that, you know, there's not one type of order that is better than the other one. There's no one size fits all, as I just said it in the introduction. It all depends on the strategy you want to put in place, right? Uh, Market orders are the most simplest one, but because, I mean, you enter the market right away. It's perfect for breakout when you value speed more than price control, when you have to react quickly. This is the most suited type of order right here. But now, if you have you know, buy the dip strategies, or you know, sell on rebounds and stuff like this, limit orders, maybe your friends as well. So it all depends on the use you're going to do. There is a one type of order that is best suitable for a certain situation. It all depends on the situation and the strategies you're going to put in place, right? There is no bad order type or good order type, basically. It all depends on what you're going to do with it. Okay. So now, as a playbook, what I can tell you is that fast momentum or breakouts, if speed is critical, go market. If you want a confirmation, maybe pre-arm a buy or sell stop. Pull back to a level, use a limit to buy the dip or sell the rally. You may also want to pair it with a, you know, protective stop loss and stuff. I showed you how to do it. You can set up everything, take profit and stop losses on, you know, stop orders and limit orders as well. Okay, high volatility news, consider smaller size and wider stops, or skip it. Okay, so basically, if you trade, you have to acknowledge that, you know, you can have some slippage even with limit and stop orders. I mean, slippage is a natural market phenomenon that occurs in unnatural market conditions, if I may say so. All right, so yeah, that's pretty much it. Um, please try, go open a Gmo account and practice, you know, practice all those order types on a Gmo account. Open this Gmo account because you're going to need it for the upcoming sessions when we're going to talk about technical analysis. Keep it simple and survivable. Start small and respect leverage. Practice and demo until all the tickets, chart trading, and stop placement feel automatic. Plan entries and exits before you click, and journal. Note the order type, the why, and the outcome. That's how you turn experience into edge. Process first, PNL second, right? So today's takeaways is order types are tools. Basically, use the right one for the job and they'll protect your capital and boost confidence. And from day one, risk management isn't optional. Remember that. 2 weeks from now, we're gonna. I really would like you to get accustomed and to get familiar with all those things, with the MT5 platform as a whole and all the type and specifics, because we're gonna do some live trading, some technical analysis. We're gonna practice a lot of things, and we're gonna go deeper into much more sophisticated things. So please open your demo account now. It's gonna be very important for the rest of the 7-part live webinar series. So we'll build on this with order placement, workflows, and position sizing basics, how to connect your IDs to a well-defined trade, right? So, and actually, let me do a little bit of teasing before wrapping this up. So during the upcoming session, we're gonna open the first module in technical analysis. Okay, I'm a passionate technical analyst myself. There's a lot to cover in this field. We're going to talk about technical indicators, you know, different ways to try and predict where the markets are going to go. This is very important for your, you know, in the build or your training plans, basically. And actually, okay, I'm not going to say too much of it, but we have an exclusive tool here at GMG Markets, which is called AutoChartist, right? As you can see now. And this one, listen to me, is going to save you a lot of time. And it's very interesting to use as well. So, you know, in technical analysis, you must have you must have learned that pattern recognition plays a big part, right? Because markets are semi-chaotic, configurations, environments. So you can try and predict trends, patterns, and stuff. Just by studying chart patterns, you can try and predict where the market are going to go. You can see in today's example on the MT5 platform, I was talking about a range, right? This can also be described as a channel or a flag in technical analysis. And you can see that identifying the right pattern may provide you with strong, solid trading opportunities, right? Because it's gonna make you able to predict breakouts and market trends much more efficiently. And for this, AutoChart, the tool that we provide at Global Markets Group. It's super efficient. Honestly, it's really really powerful, and it's gonna give you like all the different chart patterns you can find on the financial markets, how reliable they are, how to trade them, and everything. You can journal and stuff. It does all that automatically. You don't have to spend so much time opening charts after charts after charts to try and identify yourself with your eyes if it's a triangle, a bearish wedge, a head and shoulder patterns or anything like this. It's going to do the job automatically for you. So again, I'm going to stop the teasing now. This is going to be very interesting in the upcoming session. Please feel free and make sure you're going to secure your seats for the upcoming session of technical analysis that's going to be split into 3 modules. It's going to take place in 2 weeks' time, Ross, if I'm correct about that.
Yep. Yes, that's right.
I think the next session is on the 17th of September. You
17.
can you can register online, but meanwhile, if you have any questions about today's session or the upcoming session, or if you just want to talk about the markets, or if we can help you in setting up your demo accounts or anything like this, please feel free to reach out to us. We will be, myself and the Global Markets Group staff and team will be more than happy to assist you. Right. So now, if you have any questions, I'll be taking them before wrapping this up.
Yeah,
Do you see
there's a
anything?
question. There's a question. Someone's asking about a buy stop. Can you just explain that again? So, because they're a little confused. He said, "How can I buy higher than the market price? Why would I want to do
Okay,
that? So
okay, okay. Let's go back to buy stop. All right. So let me. So again, buy stop. It's perfect to when you anticipate a breakout. Okay. Again, the market is trading inside a range right here, and you anticipate the trend because you've noticed that the trend was already bullish before entering the range. So you expect the market to keep trading on the range, marking a pause before registering new high. Basically, you expect the bullish move before the range to continue further. Okay, let's say this is your strategy. You don't want to buy right now, okay, because you don't know how long the market is going to be trading inside that range. Okay, so this is where buy stop are interesting because you want to be in the market, you want to buy the market once a bullish breakout occurs. Okay, so let's say you tell yourself, you see the market has never traded above the upper red line right there. If the market goes, let's say, let me do it like this. If the market goes around the second red line, let's say, as an example, it means that the market is going to break out of his range and that the bullish trend started before the range is now ready to continue. Okay, let's say this is your strategy. This is where the buy stop is going to be useful to you. Then you're going to open your order mask right there, go to pending, buy stop, and let's say you want to be in the market when the market reaches 0.8780. 8780, right? Place, boom. So now that means that when the market is going to go up to that level, a level that has never been traded while it was trading inside a range, it means, you're suspecting at this stage that the market is registering a breakout and that the bullish trend is going to continue. Then when the market is going to go up to that level, it's going to put you in the market with a long position. Is that clearer now? I hope it
yeah,
is.
I think so. Yeah. Okay. Okay. Good stuff. Yeah, I think that's it. Okay. All right. Thanks,
Okay,
Pierre.
good.
Yeah, thanks. A very informational, lots of information there and lots to been shared. Um, so the next subject is technical analysis. I know you're very passionate about this part of the business, and this is something that you really specialize on. So yeah, I would say watch closely next week or in 2 weeks' time.
Absolutely. Make sure you secure your seat, and bear in mind, in the meantime, please feel free to reach out to us if we can help you setting up your demo account, talk about the markets or anything like this. We'll be more than happy to help you with your trading journey.
Okay. Thank you. Bye bye.
Thank you so much. Bye. Have a good training.